questions, more so than I could possibly fit onto any number of slides in here. So I'm going to go through and give you sort of a high level look of what is new, especially with the second draw stuff and loan forgiveness. I'm going to go through some of the information that we have, all the information that we have to this moment on the Shuttered Venue Operator Grant Program that's up on our website. We'll go through that, and I'll talk a little bit about how sort of, PPP and this will intertwine, and how you might want to set things up to make sure you're ready to hit the ground, or just hit the ground running now with PPP. And again, I'll answer as many questions. If you've ever been on any of the webinars that we've done in our office and had the misfortune of listening to me babble for hours on end about this stuff, you know that there's really no question that I won't attempt to answer if we have an answer for it. And if we can't, we'll do our best to get the answers for you. But like I said, we're going to go through just sort of some of the key dates, what the definitions are of each first and second draw loans, those forgiveness updates, and then what else you can do going forward. So what Congress has done, this is what we're calling it. Some people are calling it round 2 of PPP. We're calling it round 3 just because they did reload the bucket of money back there in the spring, if you remember. And then we went all the way through to August, I believe it was 8th or 9th, when not the funding ran out, but when the program ended. So this is our third iteration of PPP. They initially opened this last week to folks who were in, or actually 2 weeks ago, to folks who were in CFIs, so community financial institutions. They then opened it on that Friday before MLK Day to lenders who had assets of $1 billion or less, which sounds like a lot, but in lending terms, that's really not a lot of assets. So a lot of the small community banks, they wanted to get into the game first and accessing some of those really small businesses and sole proprietors who might not have had access to this stuff sort of solely on their own the first couple go-arounds. And then everybody has been up and going and submitting applications. Every lending institution that is now eligible to start putting in applications to the PPP portal. And so they're accepting those. Some banks were taking applications ahead of time. Some were waiting for more guidance. And I think if I hear a bank say, well, the SBA hasn't given us enough information, or we're waiting for more guidance one more time, I might throw a shoe at them. Because at this point, we have about as much information, at least on PPP, as there's going to be. I know you all remember there was all sorts of fun with every Friday night, Treasury enjoyed throwing out sort of a late night news dump that included more FAQs, especially to the PPP rules. So I think we're in pretty good shape with this one, though, at least from what I can tell, versus this time versus the first one. Some of those fun dates, as I said, January 11th, we first opened it. The big one is this one at the bottom, is that March 31st date. All PPP applications must be submitted to the SBA on or before that date. That is the program end date. That is not to say that Congress can't extend it. That's also not to say that the funds won't run out and it would end before that. People have asked me what my thoughts and feelings are in terms of how long will this funding last, because I know when it first happened in April, there was a mad dash and that money went flying out the window. And when they reloaded it, by the time we got to August, there was still $120 billion in the program. So my feeling is, and you'll see some of this in the slides ahead, and this is just Matt, I don't like to speculate too much, but I don't think it'll go as fast as it did the first time, just because some of the limits on these second draw loans are much smaller. So it's harder to take big chunks of money out of there. And some of those bigger businesses that are still considered small, but bigger small businesses may be cut out of that, so they wouldn't be eligible for the second one. So it's really going to be a lot of the smaller businesses, small businesses that we have, which in Rhode Island is fantastic because 99% of our businesses in the state are small by size standard. And when you look at a lot of the loans that we made in the state in those first 2 rounds, of the 17,000+ PPP loans, it was somewhere in the vicinity of like 87% of them were $150,000 or less. So, I mean, those are small businesses. If you're looking at what payroll constitutes, like those are very small. So I don't think you'll see that money go out the window as quickly. That's not to say it will last until March 31st. So that's a great way of answering and not answering at the same time how long this will last. So first draw PPP loans. Basically what this is exactly what it sounds like. It's the first time you've gotten a PPP loan. So if you did not get one prior to August 9th last year, you can go ahead and get a first draw loan. Basically what they did was everything in terms of eligibility is the same, and they expanded it to a couple of different types of groups. So there's no one that got excluded. All the rules that applied the first time, get applied to this time as well. And when we talk about that eligibility, what they did include were housing cooperatives, destination marketing organizations. Basically, if you tell people, or you sell people on going to really warm tropical places and no one's been traveling anymore, your business was probably down this past year. So they opened up to that. Certain 501c6s like chambers of commerce, which was big in Rhode Island. A lot of the chambers were really hurting and needed some help. And there's a couple of news eligible organizations as well that are out there. So like I said before, partnerships, LLCs.
Hey, Matt, can I pause you for 1 second?
Absolutely.
Will you hit the hide on the sharing pop-up that's on your screen, because it's blocking part of your your PowerPoint?
Listen, if the less you can read, the easier my job gets. And
Sorry
about that. I didn't realize that was on there. I was like, oh, I know I can see it, but I wonder if they can see it. Now I know. So in terms of all of this, all of you are eligible for that. Sole proprietors sort of had this big confusion because like, well, can I, can't I? My bank says I'm not eligible, but I think I am, but I don't know. And so we dealt with a lot of that, especially in the later rounds or the later months of the program, sort of like June, July, August. But there's a great piece of reading that was put together by Treasury and SBA. And it's funny, I work for SBA, but I tend to refer people to the Treasury website. If you go to treasury.gov/cares, and then you scroll down, you see for small businesses, and you click on that, and there's this nice long list of PDFs, some for borrowers, some for lenders, some are general program rules, but it's every piece of documentation, the interim final rule, the FAQs, the applications for forgiveness, for the loans themselves, everything is there. So if you ever get really, have a hard time sleeping at night, open that up and read some of those. But if you go to treasury.gov/cares, you can go and see, there's one called How to Create Maximum Loan Amounts. And so you look for the first draw one, and it takes you, and it's really great. There's about 10 of them for first draws. It's basically by entity type, and it walks you step by step through how to calculate your PPP loan amount. So we use that quite a bit. It's really well put together. And they also have one specifically for second draw loans, which is what we'll get into right now, which is just that. I got a PPP loan in either round 1 or round 2, so last year in 2020. They put a couple restrictions on this. One of them is I have to have 300 or fewer employees. In Rhode Island, that's a lot of folks. So my guess is in this crowd today, that probably covers virtually everybody. But the big one would be I have suffered a 25% reduction in gross receipts. So at the end of the day, you need to take your 2019 versus 2020 gross receipts and see if there was a 25% reduction. Or you can do it quarter versus corresponding quarter. So I could look at, and it's a calendar year quarter. This is one thing we got a lot of questions on. Can I pick any 3 consecutive months? I use a different calendar for my fiscal year. No, it's a calendar quarter. So you're looking January, February, March is Q1, April, May, June is 2, and so on and so forth. So you can really look at, okay, I'm going to look at quarter 2. I'm going to look at April, May, and June of 2019. Here were my sales. It was, $50,000. And I'm going to look at, the same corresponding quarter of 2020. So April, May, June of 2020, I only made $15,000. Is that more than a 25% reduction in gross receipts? Yeah, it absolutely is. So I am eligible. What they're doing is they've also gone in. So they've put a cap on what you can get in terms of maximum amounts. In the first draw, you can still get $10 million. In this second draw, if you're eligible, if you say you qualified for $4 million, $5 million PPP loan, you can only get 2. That's one of the reasons why I don't think the money will go quite as quickly as I mentioned before. If you are a business that's in the accommodation and food services sector, so your primary NAICS code starts with 7.2. The maximum you can get is you do the same payroll calculation, but instead of multiplying that average monthly payroll number by 2.5 times, you multiply it by 3.5 times. So it's going to help you or businesses in those sectors get a little bit more money, as this is what Congress has deemed and determined to be sort of the hardest hit of all the industries out there. And, I've heard from a lot of different folks saying, well, what about us? This is just as bad. And I 100% agree. And I give sort of the not great answer, but, I don't make the rules. I just report the news. So if you believe that there should be something for, perhaps industries that you're in or others, that is something that your senator and your U.S. representative would love to hear about. And I would refer you to them because, like I said, we just get handed these rules and then disseminate the information to you. In terms of the second draw application, it's that 2483. It's on that Treasury website. It's on the SBA website. It's one page. It's very quick, very simple. If you stick with the same bank that you used the first time, you can use the same numbers that you used for that first draw PPP loan, and it goes very quickly. There's a couple rules that are in there in terms of eligibility and how to calculate those things that we'll go through. One of the big rules is you have to have used your full amount of your first draw PPP loan. I don't think there's any businesses out there who have that money sitting around still. I mean, I'm sure that's been used. But in terms of when you go to your bank, if your loan works out to $150,000 or less, that your loan request for your second draw, you do not need to provide them with any documentation to prove that you're eligible for the second draw loan at the time of the application. And everyone's like, "Ooh, this is great. I don't have to provide documentation." Here's where it gets kind of fun, because Congress and everybody else, SBA, Treasury, didn't really write any rules into this, and it's really at the lender's discretion. So a lot of lenders, and basically every lender I've spoken to in the state of Rhode Island and nearby Mass, has said the same thing. It's not required for a second draw loan up to $150,000 at the time of application. It is when you ask for forgiveness. You have to prove that you had a 25% reduction. But we're asking for it up front. And they are fully within their rights to do that. And a lot of them are just making sure that you don't end up in a situation, or borrowers don't end up in a situation where they're going to end up with the loan that wasn't eligible and they have to pay back the whole thing. That's not the goal of the program. The goal of the program is to get individuals and businesses the money that they need to help keep people on payroll, to help pay some expenses, to help keep their business open. So you're not required to have that documentation, but your bank may ask for it, and they're totally within their rights on doing that. And you'd have to have that documentation anyways when you go for loan forgiveness for the second draw. So you're going to need it at some point. Why not have it up front? Most of us, what they're saying is because obviously a lot of people have not done their taxes for 2020 yet, being as it's still January. You can use internal financial statements. If they're not audited by a third party or an outside source, all you have to do is sign and date that front page and initial the rest, and then you can use those as well to demonstrate your 25% reduction in gross receipts. Loan forgiveness. A couple big updates that came into that for the Economic Aid Act. The first one being that idle advance is no longer deducted from your forgiveness payment. So when they first came out with all of this, the rule on idle advance, not the loan portion, but the grant portion. So that money that was based on $1,000 per employee up to $10,000. If you had, say, a $50,000 PPP loan and you got a $5,000 idle advance, once you went through and submitted for forgiveness, your maximum amount of forgiveness equaled $45,000. And you would have a $5,000 loan at 1% to repay. They flipped that around and took that out. So now if you had a $50,000 PPP loan and a $5,000 idle advance, 100% loan forgiveness is $50,000. So that idle advance is now fully grant money, not enough to be paid back, stays in your pocket as long as you use it for the eligible expenses and all that. And life is good there. There are some people who already got their loan forgiven but had the idle advance portion taken out of that as well. So say in my $50,000 and $5,000 example, they would have had a $5,000 loan that they were paying back at 1%, even though they weren't due any payments just yet. What is happening is the SBA is reimbursing the bank. The bank then goes in and makes a notation in that system that is called ETRAN that they use to monitor these loans and report on these loans, and your loan becomes marked paid in full. If you owed more than, say, your idle advance amount, maybe $2,500 of your loan was not used for eligible expenses, you still have to pay back the $2,500. But the idle advance portion is now removed from that equation. So if you haven't submitted for forgiveness yet, you no longer have to go ahead and pull that out. It's 100% forgiven. And then you can see, I'm going to skip to the bottom bullet point for just a moment because they just came out with this last week as well, sort of in the middle of the day on a Thursday for fun. But instead of waiting to create a brand new application for what they're calling streamlined or simplified forgiveness, they took the application 3508S, which is originally was used for loans of $50,000 or less. and they said, okay, anything $150,000 or less, you use this, and this is your streamlined forgiveness. They basically made it one page. You just submit it. You are not required to submit documentation of what you used your first draw PPP loan funds on with that application. It is just handed in, you sign off, you do. It's kind of like the application you're going to initial in a few places saying, yes, I swear I used them properly. The funds, they're on all ineligible expenses. We're good here, and your loan is completely forgiven. If you're over 150,000, you got to follow whichever application is that you're eligible for. So that would be the 3508, the regular one, that big behemoth that they put out that was like 11 pages at the beginning, or you can use the 3508 EZ if you qualify for that as well. And everyone goes, oh, this is great. I can just go ahead and say I used that, and I'm sure everybody used their funds correctly. But the one thing that we had been cautioning about, because we've already been seeing it and heard about it from banks and heard about it from small businesses, and we will continue to hear about it for the next 6 years, is when you signed your application for your PPP loan, you signed off saying you understand that SBA reserves the right to review your loan documents and all required supporting documentation at any time over the next 6 years. We've seen loans that are under there's a $2 million threshold, or if it's over $2 million, they're automatically audited. But we've seen loans as small as $14,000 so far being audited. So they're just going through and checking. So make sure when you do file for forgiveness, even if you're using that 3508S for that simplified forgiveness, you have that documentation showing what you used the funds for, that they were in fact eligible, and just find a folder that's going to last the next 6 years and put it someplace you're not going to forget about it over that time, and keep that around. I'm not saying the SBA is going to come knocking on your door asking for it, but I'm not saying they're not either. They reserve the right, and there was tens of millions of these loans made, but they do have the right to come check on it just to ensure that it was used properly. So it's not a threat. I'm just saying it's easier than being caught off guard and having to go hustle around, because they don't give you very long windows of time to respond to them when they say, hey, we want to check on this. And the final point is that this came out from the IRS, but basically forgiven PPP loans, all that stuff, are not taxable income. And then expenses paid with the PPP loan funds are now tax deductible. That was a big thing for a lot of small businesses, as they used to be tax deductible, and they weren't sure if it was going to be if I used federal funds on this. And now they're saying, no, you know what? They're still tax deductible. So as much as I enjoy talking about the tax aspect of all this, you do need to consult the IRS for that. I'm not a CPA. I'm not a tax expert, and I hope to never be. I'm more of one than I ever thought I would be, because of PPP and EIDL, but talk with them and double check with them. But those were two big provisions that came out of the Economic Aid Act to really make sure that small businesses didn't get left holding, a pretty big tax burden at the end of this that they normally would not have had. In terms of moving forward, what do you want to do now? If you're interested in either a first draw or a second draw loan, you should be in touch with your lender. As far as we know, we've heard a couple who are hemming and hawing about not doing second draw loans, but as far as we know, everyone who did first draw loans is doing second draw loans, at least in Rhode Island. They have told us that if you go to our lender match website, that sba.gov/lender match, that you put in, I'm looking for PPP help, and they will match you with people doing PPP loans. I would think the easier way is, if you need a lender and yours is giving you a hard time or saying, hey, we're not doing it, or no, contact us. Use the email address on the bottom of the slide, that the Rhode Island_DO@SBA.gov, and just say, I need a PPP lender. We know who's doing them and who is accepting new applications from people who might not already bank with them. One of the provisions with that will be, and I get it, I don't want to say yelled at, but I get an earful from folks saying, well, I went to this bank and they required me to open a checking account with them in order to do this. Is that legal? And yeah, they can do that. They're going to give you the loan, and they're going to service the loan, and they're going to report on the loan and do all that other stuff. And they require you to maybe be a member if it's a credit union, or have a business checking account with them. That is within their rights, just like it is to ask for that documentation. So the way I look at it, these funds are vital to a lot of small businesses. And if, it's the difference between staying open and not. Opening a checking account for your business with them to get a loan to keep them open is probably not the worst thing you'll ever have to do for your business. So that is there. And for me, it's a separate account for that loan. It makes the whole reporting and counting and tracking and all that other stuff that much simpler for PPP stuff. Because again, while we have gotten a lot of information over the last however many months about, forgiveness and how to do this and how to do that and what, it's still changing. It's still difficult. So this makes it just, a little bit simpler for you. So that's the end of PPP. If you want, I can dive into the shuttered venue stuff real quick, Molly, and do that. And then we can do all the questions.
I would love, I think the questions are coming in so fast and furious, which is exactly what I expected.
That's weird. We don't get a ton of questions about PPP usually. It's odd.
Having participated in a bunch of webinars in the spring, I know that that's not true. So I'm going to ask, I'm going to feed you PPP and IDLE questions, as well as some that are about the interaction between the SVOG and PPP, and then we'll go to SVOG.
Okay, perfect.
All right. And these are just in order as they came in. I haven't sorted them in any sensical way. So here we go. On the subject of PPP, can a nonprofit that does not have payroll but pays expenses for volunteers get a loan and get it forgiven?
Yeah, there are ways, and it's actually, might be good. I can let me pull up while we're talking that link to here's how you go ahead and calculate the loan amount stuff in the chat, because it really is, there is ways to do it. Yes, absolutely. And it walks you through all of that. So rather than just say, hey, yeah, there's ways, and leave you with that, let me give you the link to that PDF just so folks have it, because it is a very good document to help folks go through that. Bingo. All right, so let me pop that in the chat right now. This is exclusively for first draw loans, what I just put in there. So you can copy and paste that in there. Hopefully everybody gets that. And then there's a second one if you go to the Treasury website on there for exclusively second draw loans. It'll ask you, there's a first section on it about what is required in terms of documentation to prove the 25% reduction in gross receipts. And then there's also documentation, the same exact question, like on this type of business, how do I calculate my second draw loan amount? It's all in there.
Okay, next question. And then I will also let y'all know that my internet is super fritzy right now. So I'm not able to access like my email or Facebook or anything else. So I'm just doing this for the moment. Okay, what if we don't have any financial data for 2019? We're a new business that just established in December 2019.
So there is provisions in there where, and I guess I would answer this with a question, but it's hard to do this going back and forth in the chat. But if you're a business that did not get a first draw loan, there is ways you can go in and you can measure, you can use your first quarter data and your financials from your first quarter of 2020. That would be your look back period. That would be what you measure against and use that to calculate your first draw loan.
Okay. Does the PPP, and you have so many questions. I love this. Does the PPP loan forgiveness application 3508-S apply to the first draw?
Yes. So it applies to first draw and it will apply to the second draw as well. So if you used all your funds, we're at the end of our covered period, that's all gone, and you're still waiting to submit for your forgiveness for your first draw loan, and you're under $150,000, use the 3508-S. And it'll be the same deal unless we get told otherwise. So my favorite saying is, as of January 26, 2021 at 12:32 p.m., you'll use the same one for your second draw loan, subject to change.
And we'll have another follow-up to this webinar later when we have more information. What if somebody didn't apply for a first draw PPP? Can they apply for second draw?
No, because you need to have that first one to get the second one. So to me, the nice thing is if you didn't get the first one, you don't have some of those restrictions and burden of proof of gross receipt reduction, things like that to get the first draw. All those first draw rules apply to you. So you can get up to $10 million if you qualified for it, of course. But so you would go by the first draw loans. It doesn't mean you can't get a second draw loan, but here's, and we get this one a lot. Can I get a first draw if I haven't gotten one and a second draw? Not at the same time, because remember the rule is you have to spend all of the first draw funds before you can get a second draw. You don't have to have it forgiven. You don't even have to have applied for forgiveness, but you have to prove that you spent all the funds. So you have to use a covered period that is 8 to 24 weeks. So you need to start looking at a calendar right now and say, okay, if I get it today, I got 8 weeks from that, and that brings me to like what, the third week of March, and the deadline right now is March 31st for first and second draw. So I need to hustle to get both of them. It is doable, absolutely, but you can't just get it all, spend it in 1 week and say I'm done. It has to be at least 8 weeks. So you can do both, but if you have not gotten one yet, you would apply for a first draw first, and all those rules for first draw apply to you, and the second draw rules do not.
Great.
So you can't get just the second loan.
Correct.
Second PPP.
If you haven't gotten a first one, you can't get a second one.
You have to apply for both. Okay.
Yep.
Well, you have to apply for the, yeah, you have to apply for the first draw first.
Mm-hmm.
Yeah. We can't skip to number 2, which if I haven't gotten a PPP loan personally, I'm good with that. There's less requirements of me in terms of what I need to provide, and potentially I can get more money as well. But I think the first draw has it has fewer hurdles you got to get over to get to.
Oh, well, okay. That's my question coming up in a bit. So,
okay. I'm just updating my questions list. As you guys are asking them faster than we can answer. Okay. If a business is receiving unemployment insurance, do they need to stop to receive PPP? I assume the person asking this is a sole proprietor that's receiving pandemic unemployment assistance.
Correct.
So, yeah, Matt, do you know how those two programs interact at all?
Yeah, and I don't believe anything has changed, but I mean, we talked a lot with, with DLT over, the spring and summer and how they interacted. But basically, if you're a sole proprietor, or let's just say you have employees, right? And so they're collecting unemployment. You can't pay them and they collect unemployment at the same time. And the same rule goes to you. So it's one or the other. But the way DLT explained it to us, and I believe this is still, and I might need to check back with them because who knows if they've changed their rules on this, but what they explained to us is basically this. If you're currently collecting the COVID, version of unemployment, and you're getting the extra kicker in there, you can get your PPP loan and pay yourself as you normally would for those 8 weeks or however many weeks. You would report it every week. So your unemployment insurance, you wouldn't get a payment from them. But then at the end of it, I've expended my PPP funds. I can prove that it was on, this date, we're done. I can go back in and already be in the system and continue to receive your unemployment benefits. I don't believe that has changed. I haven't seen anything that has said that is changing. So as far as I'm concerned, that is still how it operates. But you cannot get both at the same time and pay yourself with both at the same time.
But you don't need to stop it. You can just report it. Okay.
Correct. And it might be something, right? Yeah, you might want to double check with them, but that is what we were told. I have that in writing from DLT, from somebody fairly high up there, that he said that's the case, and that was the case even as recently as July when the $600 kicker sunsetted. So I don't think they've updated that. I don't know why they would have changed it. So I believe that is still the case.
And that's something that we can follow up on. Randy, will you write that down to follow up with Rob at DLT about interaction between PPP and PUA?
Got it.
Thank you. Okay, for PPP, are we able to claim an increase as a seasonal business that applied too early and use tips and payments to wait staff that you paid but did not report on either 1099 or W-2?
So there is a provision within the new rules about if you got a PPP loan the first go around and you discovered that because of rules that came out later or whatever, that the calculation was incorrect and you should have gotten more. you can go back to your lender with your documentation and show, okay, I said I got $75,000, but I did, all this, didn't know I could do this, this, and this, or all this change or whatever. I'm actually eligible for $95,000. They can give you the balance. Absolutely. That is 100% allowable. I will say this. If you go and get that $20,000 or whatever the difference is, you're going to have to make a business decision, right? Because you're going to have to spend those funds before you're eligible for a second draw loan. So now you've pushed your clock a little bit further, and we're sitting there playing the game of, I hope those funds are still there when I'm ready to get my second draw loan. So the short answer is, yeah, you can absolutely do that. But just remember the rule of, I need to expend all of my first draw funds before I can even apply for a second draw fund. And what we're seeing in terms of turnaround times because the lenders are using a separate portal than they did the first time. And us in the district office have no access to it, which is a lot of fun. Whereas we did the first time, we're hearing it's anywhere from 1 to 3 days to get an approval for your PPP loan. So it's not as quick as the 1 to 3 hours that we were seeing last June, July, August at the end of that. So if you apply, today, you might not get that money until, down the road. And if it doesn't get a loan number in time and the funds run out, even though you submitted your application, if the funds go away, there's no guarantee any comes back. So you can get that increase, but just be leery of those other, factors that coincide or are in play with that.
If you are a government-owned convention center with a theater and an arena, can you apply for a PPP?
That's a fun one. I'd have to go into the IFR because there is rules and restrictions on owner eligibility in terms of there's a breakdown, and I'm not bringing it up to my head right away of what it is, of where you can get, how much of your revenue comes from state, federal, everything else, all these other places that would determine that. My instinct would say no, but that's not 100%. So if you can, just put that in an email and shoot it to that Rhode Island _DO at SBA.gov. There's only 3 of us in the office that have access to that, myself and 2 other PPP experts. Well, they're the experts. I just, they teach me and I get to come on here and talk to everybody. But we'll go find the answer for that and get it to you for there. But there is a limitation on where you get your money from and how much and all that other stuff that comes into play. And I haven't memorized the entire 82 pages of it yet, so I'm working on it.
Okay. Sorry, my cat is, of course, deciding he wants to help with this typing.
I'm surprised
okay.
I've made it 40 minutes without my dog barking at something moving outside. So we're doing good.
Can you use direct payments of doctor's bills and medicines as employee benefits for the max monthly average payroll?
No, so it's going to be basically it's group health benefits. So if it's going to be those insurance things and whatnot that are eligible. They did expand some of the stuff that is eligible in terms of eligible non-payroll expenses, but that was not one of them that's in there. So it's really going to be those group health benefits, but the other stuff those wouldn't fit into that bucket.
Okay, and I'm actually going to circle back to a previous question with a clarification. Can you use tips and payments that were not reported on W-2 or 1099s in calculating?
Tips, yes. 1099s still do not count because they're considered independent contractors and they are eligible for their own PPP loans. But tips, especially in types of industries like we have in the room today, in restaurants and things like that, people are like, oh, I didn't know I could use tips, which is fun because that was in there from day one. But there's a way of reporting it. There's also language in the interim final rule that talks about if you don't have an official way of counting it, just make a good faith estimate as to what it was. I mean, if it's, you say you made $1 million in tips in a year and the industry average is, like 40,000, they might have some questions about that. But, you say, listen, I have 10 people a night, they average, $50 in tips. So that's like, blah, blah, blah. And you can do the math out that way. You can go back and factor in tips and things like that. But 1099 stuff is still not eligible to be counted in either as an employee or towards your payroll expenses. It's W-2 stuff for the most part, anything that would count kind of as W-2. The sole proprietors, it's how you collect your money that way and how you pay yourself. And again, you're gonna have to back that all up with documentation as well.
If we have no employees, since theater venues were all shut down completely as a nonprofit, but continue to incur costs like rent, insurance, utilities, are we eligible for a PPP, or are only entities that have employees eligible?
Right. So I mean, when you go back and look at that document about how to create your PPP loan, they'll show you how to go in there. I mean, if it's at one point where, hey, we do have employees, but just not right now because we're closed, you can go back and use the allowable look back periods, in this case, like 2019, right? And say, here's my payroll information from that time when we were up and going. And you can use it on that. As long as that 60-40 split that's been there, that they changed, it used to be 75-25 at the start, right? And now it's 60-40. So 60% of the PPP funds that you get or more are used on payroll or eligible payroll costs. You can use that other 40% or whatever it ends up being on things like rent and utilities and other eligible non-payroll expenses for your business. Absolutely. But I would refer back to that document about how do I create this? What can I use as a look back period as far as, okay, well, how am I calculating this? We've been closed for like a year almost. But you can look at 2019 when life was, normal and you were up and running and things like that. So it's there's a couple of different ways to get to that, but yeah, you can use up to 40% of the loan funds on those other eligible non-payroll costs like rent and utilities.
Great. And the person, Tom, I think if you need further clarification on the tips question, you should email the Rhode Island SBA team directly. Yeah. Okay. We're going to move on to questions about EIDL now. Can you receive, so if folks applied for or were unsuccessful getting the EIDL or the EIDL advance back in the spring, can they receive the first EIDL advance or an EIDL advance now?
I'll give you a really good government answer with this. Yes and no. So the way they've done it with EIDL is EIDL Advance ran out of funding last summer. And what they're doing now is it's back, but it's not back for everybody. They reloaded, they put more money into EIDL, the loan program, and they put more money into EIDL Advance, but they're calling it targeted EIDL Advance. So basically, if you are a business that received less than $10,000, so maybe you had 4 employees, so you only got $4,000. If you received less than $10,000 in EIDL Advance, and you operate in what they're calling, it's basically like a low income area, but they have this map that they're allegedly coming out with, where basically it's like geo mapping, right? You're going to go in, you're going to type in, 123 Main Street in Pawtucket and see if 123 Main Street is in one of those areas. If it is, SBA, not our office. I try not to punt too many questions, but this is really an Office of Disaster Assistance issue. We don't know how they're doing it, but they're going to reach directly to you. They're going in, they know which addresses fall in those categories, and they're going to reach out to you directly. They're going to send you a link to a portal, kind of like you did the first time. And what they'll do is you go in, you fill out some information, and they will get you the balance. So if you got $2,000, they'll give you 8 to get you up to 10. If you have not already applied for EIDL, you are not eligible for this. You can still apply for the loan portion, which they're now giving 15-month deferments on. It's still a 30-year term. It's still capped at $150,000. It's 3.75%, 2.75% for nonprofits. So that is still available. But the advanced stuff is only for people who got in the first, we'll call it like 6 months or so, and they live in specific areas that have been mapped out. They did this based on census data. So that's where that's going. I see, yeah, EIDL is not forgivable. The loan portion is not forgivable. So EIDL has 2 portions to it. EIDL Advance is the grant. That is free money. That is yours to do with what you want, as long as it's an allowable, eligible expense, which is basically everything PPP is allowed to be used for. The loan portion must be repaid. You have 15 months before you owe anything, but you'll get something in the mail. You'll sign a loan agreement. It doesn't sneak up on you that, oh, how did I get this loan? You have to sign a bunch of stuff and say, yes, I understand all of this, A, B, C, and D before you get that. And then that must be repaid over the next 30 years.
Around the EIDL advance and being the need to be in a low income area to get the targeted advance, is there a way that we can look up addresses and see, how do we find out if our entity is within the low income geography?
We're waiting for them to release whatever geo-syncing map that they're using. I would do the following, and this is something I just kind of thought of in the last day or so. This does not mean that you are 100% guaranteed to be officially in a low income area as it pertains to the EIDL advance thing. But it is an idea if you want to get a general clue while we wait for our Office of Disaster Assistance to move. If you go to the SBA website and search in the top right, there's a search feature where you type in HUBZone, HUBZONE. It's all one word, but it's historically underutilized business zone, HUBZone map. You click on a link and it's that same geo mapping thing. We use this for one of our government contracting programs, and it's the business needs to be located in a low income area in order to qualify as one of the qualifications. So that would give you a good idea. If you're not, it doesn't mean you're excluded. Definitely. If you are, it does not mean you're 100% included, but it would give you a good idea, I would think. You know, a lot of folks who are basically all of Providence, effectively all of Pawtucket, all of Central Falls is a hub zone. And then there's a bunch sort of scattered around the state, but there's more. If you remember, Commerce RI had those like enterprise zones and things like that. There's another layer that they'll probably go down to. So you'll see pockets of areas in places like Newport, Smithfield, Coventry, places like that, where they might pop up where they wouldn't be on the hub zone map, but they would at whatever level they're using here. But at least the hub zone map would give you an idea.
Okay. And then I still have some outstanding PPP and EIDL questions, but since it's 12:51, we're going to move on to SVOG, and what I'll do is the same thing I did for the Commerce grants a couple months ago, which is I'll make a big Q&A and put it on the same webpage that we put the recording. And we'll post that, and I'll do that today, and we'll post that on our website, and then I'll share it through Facebook, etc. And we'll have you can email either me or Matt or both of us, and we'll put our emails in the chat at the end with additional questions. Okay, so the big questions we're hearing about the shuttered venue operators grant is about its interaction with PPP. So Matt, can you just clarify about your ability to apply for and receive either or both?
Yes. So right now the rules are the following. You can't get both. That's really the condensed version of it. And so, I mean, and can you guys see the webpage that came up okay?
Yes.
Okay. So as you go down, there's a couple different eligibility requirements and things that are in there, but you can't have gotten a PPP loan on or after December 27, 2020, which that's when the Economic Aid Act was signed, creating this program and also extending PPP. So basically either you got one or you didn't. If you got one in 2020, that's fine. You can still get this. Basically, as we go down and sort of, this is where I got like, oh, okay, this is where people can do their homework up front so they can get moving, because for better or for worse, our Office of Disaster Assistance is in charge of this program as well. We don't know when it's going to be up and running. Molly sent me stuff. I've seen things from other people, and the guesses, or the educated guesses, are all over the map. So I don't even give any. I just say, you know what, they're going to do it when they do it. And I have no clue when it's going to be. But for me, the big thing is going to be this first bullet right here. Is, for an eligible entity that's in operation on January 1st, 2019, grants will be for an amount equal to 45% of their gross earned revenue, or $10 million, whichever is less. So if you want to know which one you should be doing, go figure out what your gross revenue or your gross earned revenue was, figure out what 45% of that was, and then figure out what your PPP loan would be. If it's a second draw, make sure you have that 25% reduction, which most folks in this group will have no problem with that, but see which number's bigger. right? Because when you start looking at what this can be, well, I'll talk about the priority stuff in a second, but when you look at these allowable uses of funds, payroll costs, rent, utilities, scheduled mortgage payments, scheduled debt payments, things like that, worker protection expenditures, so basically PPE equipment, things that are now eligible for, it's the same stuff that PPP can be used for. So it's not like, well, if I get this, I can't do this. But if I get PPP, I can't do that. And they're really the same as far as I can tell you. So figure out which number is going to be bigger or more beneficial to you. And then if it isn't the shuttered venue operators grant, then don't worry about PPP. If you already have a loan, you haven't done forgiveness, you'll do your forgiveness and you can go on with that. And you wait for this to open up. And believe me, we'll make sure everybody knows when it's opened up. But if it's the PPP loan, you can say, okay, you know what? That's better for me. And I don't have to wait. Let me just go and get that taken care of. Does that make sense?
Matt, I'm hearing conflicting things from
all
the sources. I know you're shocked. One, in some places I'm hearing you have to not apply. You can only apply for one. Some places I'm hearing you can apply for both and you can accept only one. So I think folks are really concerned about, losing out on PPP if they wait for SVOG. So can folks apply for both and just wait to see? Or do folks who are eligible for SVOG, are they better off not applying for PPP?
Well, I would say this, there's no mechanism that the agency has that is open and available to accept applications. So you can't apply for SVOG right now, but you can PPP. If you apply for PPP, your lender's going to put it in, and if it gets approved, now you've got an approved PPP loan. If you get the funds, you're done. And we might not even have an application or an application portal or a process or anything for SVOG. So that's why I think that 45%, like figuring out that number, right? Like right in here, the 45% of their 2019 gross earned revenue, figure out that number like today. It's 12:54 on my clock. We're done at 1:01. Go figure that out. And then figure out what your PPP loan amount's going to be. And that way you don't have to wait, or you don't have to wait on PPP. If it's going to be, hey, the shuttered venue operator grant's going to be what's for me, well, then you don't have to worry about PPP running out of money, because this is going to be more beneficial to your company or to your business, to your entity. If it's the other way around and turns out PPP is going to be more money and it's used for the same stuff, then don't waste time. Go to your lender and get started on your PPP loan.
And someone commented
waiting won't get you anywhere.
Yeah, someone commented in the chat that Americans for the Arts this weekend sent out some guidance recommending folks not apply for both to if you think you'll be eligible for, and the SVOG will be more useful to you than PPP, to wait because of the danger of making yourself ineligible. Okay.
It makes sense. I mean, like I said, at least we have something we can base a grant/loan amount off of for both programs, and from there, that eliminates some of the, or it might increase the waiting, because you have to wait for the shuttered venue operator grant to be ready to go. It could be tomorrow, and it could be the end of February. I really don't know.
So I'm sorry to interrupt. I have one clarifying question based on what was just said.
Yeah, by all means.
Okay, so from my experience, I know that you actually have to sign the PPP loan agreement before they actually release the funds, because you have to sign to accept a loan. So to go back to this other person's question, if we decide to not sign the loan and not take the money, is that good enough to qualify us to get the shuttered grant?
Bad answer is I don't know. And I personally, and Molly's been on a bunch of my stuff, so she knows, like, this is kind of I'm very cautious and very conservative with this stuff. I personally, if it were me, I wouldn't risk that for two reasons. One, both of these are run through the agency. So the agency has a big old database now, and it's going to find EIN, socials, business name, all that stuff, and say, oh, look, they have a second draw PPP loan application approved. They're not eligible for this. I wouldn't
Right.
want to.
Okay.
And then the other thing being, if you put it in and you get an approval and you wait to sign your, and say somehow that doesn't trigger any alarms, and you wait to sign your PPP note, you only have 10 days.
Yeah, I totally get that. I'm just trying
So
to
they, and
find
then
out
they pull it
because,
out. Yeah. So I mean, I
right,
personally, I would not,
right,
I wouldn't submit to PPP unless I know that
right.
is the route that is better for me and my
So,
business.
okay. Right. So I get that, but it may be possible that it may be too late for some people since they didn't release information about the shuttered grant until, when was it? Like it was a couple of days after like a bunch of banks had started accepting PPP. So I get what you're saying, but it may be too late for some people. So that's why I'm wondering if you know specifically like um, if you're going to be penalized for declining a PPP loan.
It's without any extra stuff for me. It's really hard to say yes, no, or somewhere in the middle of all of that. I can just go on based on what I know of what's out there. I would not apply for PPP, whether it's a first or second draw loan right now, if you think that that the SVOG is better for you. I just wouldn't do it.
Well, what is
I,
what's the minimum to the maximum on the SVOG?
So maximum is going to be, so minimum is 45% of whatever your 2019, and then maximum is 10 million, whichever is the higher number.
Okay.
So I mean, if you're eligible for $22 million based on, that's 45% of your gross earned revenue. Drinks are on you, and we can all go out next time, but you'd be only eligible for 10. But otherwise, I'd go back and make. I think, doing that calculation now for this program, figuring out what that 45% is, and then doing a PPP like mock application. Here's what I would get. That eliminates the, I don't know if I should wait or not, or should I do this, or it takes a lot of the guesswork out, at least in my opinion. We are very hopeful that sometime next week we get something on SVOG. I'm telling you right now, for those of you that dealt with EIDL and the Office of Disaster Assistance, you know that nothing comes quick out of them. That's just the reality of the situation, unfortunately. And it kills us too, because we don't have answers for you.
Okay, and also with the shuttered grant, they may eventually run out of funds, correct?
Correct. So
Okay.
what they have done, if you go back up a little bit, so they have reserved $2 billion within this for eligible applications for any entity that has up to 50 full-time employees. So if you have less than 50 employees, there's money reserved for you. And at most, it's going away in $10 million chunks. My guess is if you have a small venue, that's probably going to be, you're not getting $10 million out of that. You're getting small. So it's smaller amounts going away. A lot like the PPP stuff, right? Like it's smaller chunks of money this time. But once that money's gone, yes, it's $2 billion is reserved for up to 50 employees, but there's only 15 billion total. And what happens is when we start rolling down just a little bit here and how to apply, there's the first priority, which is entities that have had 90% or greater revenue loss. Their second priority, third priority, and they sort of tier down what your revenue loss was. There's supplemental. Basically, if you got one already, you can get more, but then eventually just opens up to everybody. So even these bigger venues can get in there. So I don't know how long this will be. And I don't know how quickly that money will go, because this is a brand new program. And there's a lot of venues out there who are teetering on the verge of being, I'm eligible for this or I'm not. Like we get a lot of folks, well, we have live music every night. Does that count? And I'm like, well, we don't know because we haven't been given anything with this, but I know you're eligible for PPP. So if it's dire, I need money right now, go PPP. If you do that calculation of the 45% and you figure out PPPs more, don't waste time, just go get PPP.
Is that taxable, the PPP?
No. So that was one of the things that came out with the Economic Aid Act. If we go back, where was it? Let me just so I can. So anything that's forgiven, the PPP loans are not taxable income, and any expenses paid with PPP loan funds are now tax deductible. That's per the IRS.
All right. So
I can't answer if the shuttered venue stuff will be. My guess is it will follow in lockstep with that, but that would make a lot of sense. So that doesn't necessarily mean that's how the government will do it.
Oh, one more quick question, sorry.
Absolutely.
So if someone has been receiving the pandemic unemployment insurance, and they go back and apply for PPP, first round, second round, you said up until March 31st, is that correct?
Yes, that's the
Okay.
deadline for.
How do they go about paying back the unemployment insurance, the pandemic unemployment insurance? Do they just, that person just wait to hear from unemployment?
I probably wouldn't wait on it. I'm a little more proactive in my approach. I would just call DLT and say, hey, here's the deal. Here's the situation. Here's what's going on in terms of dates and payment stuff. What do you need me to do? And they'll have folks that can tell you that. They've been pretty good about having all that stuff readily available for people.
Oh, okay. All right. And so the business owner, the small business owner, sole proprietor, applied in plenty of time, right at the beginning, actually, of the EIDL grant. They did not accept the SBA loan. It wasn't the PPP, it was an SBA loan.
Yep, the EIDL loan, yep.
Yep. So
hi, Lisa. Since we're over time and we need to be focusing on the shuttered venue for a little bit, and I have literally 4 pages of questions, I'm going to ask you to contact Matt directly instead of, the questions should be going through me.
Okay, sorry.
Matt, can you stay on to answer some of these big picture questions as best you can, or do you have a hard out?
Let me just double check the calendar. That's a great question. I know I'm free till at least 1:30, but let me, just for fun. It's amazing. You start a week and your calendar, it seems fairly clear, and then you look at it and it's just all blue all the way down. I am good until, we'll call it 1:45.
All right, so we'll get through as much as we can, but again, just a reminder, please filter all questions through the chat through me, because I do have a big list of questions that I'm trying to get through. All right, so a lot of the questions about SVOG are about eligibility, and I know that I will also sort of pre-answer some of this for Matt. So we are waiting, all of us anxiously, for the federal level SBA folks to release more details and information about who will be eligible and the specifics. The biggest thing that I'm seeing is we just don't know. There's been a lot of stuff around number of seats, fixed seating requirements, how much folks are paying their artists that they're presenting, et cetera. Matt, can you talk about any of those eligibility requirements?
The bad answer is I can tell you what's on our website, and that's the only thing I know for sure. The issue with this program is it's not the brainchild of anybody within SBA. Frankly, neither was PPP. PPP is actually a Treasury program that SBA executes because Treasury doesn't have the ability or the programs to do it. So literally when we have questions that we elevate that no one around here can figure out and we send it up the chain, they have to have them answered by Treasury. And whoever came up with shuttered venue is sitting there writing effectively an SOP. So they're going to come up, you'll see an IFR that comes out just like you did for PPP, all this other stuff. And my bet is there'll be a bazillion and a half FAQs that pop out as well. But beyond like the fixed seating stuff, I will say the following. If it isn't written in the Federal Register, you can hear from whoever you want and any group that may be lobbying or otherwise. And I'll point to Airbnb owners with PPP. Airbnb spent millions of dollars lobbying to make Airbnb hosts eligible for PPP loans. And at the end of the day, they were not. So unless it's written down, not to like shoot everything down, we don't know right now. So until it's written down, I really have no clue other than what is listed on that website in terms of, theatrical producers, live performing art organizations, operators, relevant museum operators, zoos and aquariums, et cetera, et cetera, et cetera. And the definitions of some of those we don't know what they're going to be. We know what we think they are because, we're grown-ups and we made it this far in life. We've been to a lot of these places and we know what they look like. But until the government puts down in writing what the heck this is, I don't know for sure. And I know that stinks and that's frustrating. And the second we have it, my guess is I'll be back on the horn with Molly to set another one of these up. But until that point in time, yeah, until that point in time, like we have nothing to, I promise we have nothing more. It's frustrating for us. We have nothing more to give you guys though, other than what's on that website.
One of the other big questions is about the gross earned revenue. So I'm just going to say what my educated guess with an emphasis on the word guess there is for SVOG, you're eligible for up to 45% of your gross earned revenue from 2019. My guess is that that is going to be only earned revenue, so not contributed revenue. And I do not know about whether or not it's going to include additional programming beyond like tickets and concessions, things like education classes, that sort of thing. I do not know. I will say that the SOS bill was primarily written and lobbied for by for-profit music venues. So that can kind of help inform you about what the language in the bill is and what they're focusing on. But it will be earned and not all revenue. Matt, do you have any additional insight on that?
Because of the whole second draw thing and the 25% reduction, and then everybody wants to know, all right, so what's the definition of gross receipts? And this is just PPP, but my guess is that it will look something very, very similar to the definition in the IFR there, where it says gross receipts includes, but is not limited to, 1, the gross amount received as contributions, gifts, grants, and similar amounts without reduction for expenses of raising those amounts. The gross amount received as dues or assessments from members or affiliated organizations without reduction for expenses that you had to spend to go get those. Also, gross sales or receipts from business activities, including business activities unrelated to the purpose for which the organization qualifies for the exemption. So basically, if they're smart, and I think they're smart enough to not try and rewrite the rules on all of this, it'll be similar to that. So you're going to have a lot that you're going to be able to include in there. So if you have one of those multi-purpose, multi-function spaces where, again, I do have performances, but I also we have neighborhood workshops or, community workshop or, learning. We all used to be able to sit down together and do a workshop face-to-face in a room as opposed to, staring at our laptops, things like that. My bet is if that's included in PPP for revenue and gross receipts, it'll be included in this. That's my guess. Don't quote me on that.
So you do think that it's possible that for a lot of nonprofits that they'll be able to include contributed revenue? It won't just be earned revenue?
I think it's possible, yes, because I think, and I know the voices in the lobbying have been loud that say, listen, a lot of these nonprofit groups, rely heavily on A, B, and C, whereas, a typical for-profit business relies exclusively on, just C and D.
Mm-hmm.
So you're not doing them any favors by counting out all these different things that would normally be in, if you can show, hey, listen, the last 5 years, I've gotten this grant, this grant, and this grant for this amount of money, but suddenly I can't count that in my calculation. Like, that's not doing me any favors, but it's in the PPP definition, right? So now I can go back and say, well, that's counted here. So I'm going to go back and maybe I didn't get that grant this year because 2020, they just didn't have the funds available or whatever, so I can show that towards my 25% gross reduction. So the SBA doesn't tend to go and stray too far with definitions of things like that. If they've published it in one place, my guess is they'll have something very similar to that. And my hope is, it's definitely possible, I guess, is the short answer, that they will do that for the shutter grant, for the shutter venue operator grant, excuse me.
So for y'all nonprofits, that's sort of a good news, bad news statement. One, it's good news because it vastly expands the amount you would qualify for. The bad news is we're not sure, and we don't know, and we won't know until the official guidelines are out, but that makes the decision between PPP and SVOG more difficult for y'all because your SVOG eligibility might be a larger amount than we thought if it's all revenue and not just earned revenue. Whew, this is tricky. So I have a ton of questions from folks about really specific eligibility questions.
Okay.
And I think the big answer here is Matt has told us what he knows. We don't know other than what's on the website. Matt, can you drop the link to the SVOG website into the chat, because I can't do anything else on the internet because my internet's so slow right now.
Absolutely.
But to give y'all and Matt an idea of questions that we're seeing is, you know, a lot of nonprofit arts and culture organizations that do not own their own venue but are presenting performances. We're also seeing stuff from someone who runs like air shows, also venues that are on boats, ticket brokers, concessions folks, also places like museums and other spaces that do a lot of performances, host a lot of performances, but they may not be ticketed, or they may not have fixed seats. So we're seeing like a very large range of folks wondering about specific eligibility questions. Any ideas on any of those, Matt?
No. To be, no, it's picture what PPP was on April 3rd when the doors first opened, right? Like no one knew what any of this was, and the definitions were vague in places, not great, and a lot of people had questions like sole proprietors, are they even eligible? And then you start. This is what this is. This program was created from thin air, and is being put together as we speak. They built PPP and the rules for that in just over 2 weeks, and they're basically trying to do the same with this, and they're trying to get as much definition into it as possible. You know, hopefully learning from some of the headaches that were caused by PPP. I would bet, because you are not the only ones asking these questions around the country. I talked to a lot of different offices around the country, and they're getting the same kind of questions. These are all being thrown up the food chain into DC, and whoever's putting these together is well aware of. There's some very finite questions that are being asked about, eligibility wise. They're very, very specific, and they're gonna address as many of those as they possibly can in there. So without anything to base an answer on, as annoying as it is for me to say, I really don't have anything, and I sympathize with that. And I know you probably don't care that I sympathize with that. I don't have any answers because I don't have any information. And so I can't, if I make it up and tell you it's X and then it turns out it's Y, that's bad on a couple fronts.
Yeah, so I will, full disclosure, I knew what Matt's answer was going to be to that before I asked it, but just, I remember being in the PPP webinars and giving some of the PPP webinars in early April. And there was one day when I started the webinar, having finished my research about the current PPP guidelines 2 hours before the webinar. And then by the time I started doing the webinar, it had changed. So, so I think the biggest outstanding questions that we have that will continue to run up the food chain, and I will also say that Todd and Randy and I have been pretty active in some national arts advocacy groups asking these questions on a national advocacy level. So we're working with pretty much every other state arts agency and other national groups like AFTA to collect these, but we'll work with our congressional delegation as well, and we'll put together an FAQ. We'll definitely have a follow-up webinar, maybe two, one specifically on PPP and one on SVOG once we know more. And we'll have an FAQ up on our website this afternoon with as much information as we have currently. Some of the other outstanding questions that we have that the SBA just doesn't have answers to yet that I know of are things like, will the application for this go through the grants.gov? So will you need a DUNS number and SAM numbers? My educated guess is that you will need a DUNS number. I don't know about SAM. I'm guessing it will not go through grants.gov, the application, but those are just, again, guesses.
They're creating an application and a portal. They moved PPP to basically it's like a box type platform, and they'll probably do the same for this. The DUNS number, I know that was required by the state for a lot of that. It wasn't required for PPP, but there have been a lot of issues with PPP, and they're going to try and remedy some of this with EINs, socials, things like that. So just be leery of that, especially if you're a sole proprietor and you operate under your social. There's been some bumps in the road with trying to get PPP loans. The banks are not supposed to approve them based on your social anymore. So don't mean they're not doing it, but the agency has asked people go out and get a different tax ID.
Yeah, and also just a reminder that the DUNS number is separate from getting your own EIN for an LLC or for a nonprofit. It would be your tax exempt number. Yeah, I think, and then there's, additional questions around whether or not the artists are paid, if they're youth artists who, gross receipts versus gross earned revenue, and then worries about running out of money. But again, these are things we don't know yet. So I'm gonna, I think, wrap things up now and just say, this recording will be up later this afternoon, along with an FAQ that I will continually update as we get more information. You can email either Matt or me with your follow-up questions, and we'll try and get those on the website as we can, answers as we can. And we will absolutely be holding at least one, maybe two follow-up webinars, one about PPP and one about SVOG once we know more about SVOG. And then I will work with Randy and Todd to talk about how we can maybe do some advocacy work and getting these issues to our federal congressional delegation, because we have what is, in my opinion, the most arts-friendly congressional delegation in the country. Matt, will you say what your email address is again?
Yeah, I will put the office one in there. I'm going to put my personal one in there too, but I'm going to caveat that with this. Not that I love answering people's questions, and I get to them as quick as I can. And you guys have been incredible about getting a whole bunch of questions in here. If you send it to the Rhode Island inbox, the one that I put in right now, there's, like I said, 3 or 4 people who can get to that. I might be able to farm it out and get you an answer quicker. I will get to you. But you guys had so many great questions that if I get 37 emails on top of what I've already gotten, it might take me a little bit longer to get to you. If it comes directly to me, I'm more than happy to do it. But like I said, the email traffic is at an all-time high, and I work my way from the bottom of the inbox up to make sure. So there's my personal one too. It's matthew.spare@sba.gov. The Rhode Island _DO one, I can get you, depending on the question, I can get you to somebody who will give you the correct answer as well, and it'd be a little bit quicker. But either of those is absolutely fine, and we're happy to do it. And again, Molly, thank you for letting me come out here and explain PPP and all the fun new stuff, and then tell you basically we don't know much about shuttered venue.
We'll do this again several times soon.
Absolutely, you know where to find me.
And to everyone, our RISCA's website is arts.ri.gov. And we'll also be posting, I'll build a new page this afternoon with the Q&A and this recording that I'll continue to update, and I'll post that in the Facebook groups as well. And again, feel free to email me with as much as as many questions as you'd like, because there's some stuff that I can answer, some of the easier PPP and SVOG questions I can answer to keep Matt's and SBA's inbox focused on the hard stuff. But thank you all for coming, and I appreciate y'all. And I wish we had more about the SVOG, but we're still waiting.
They're coming out with more stuff fairly regularly, like that's updated twice in the last 5 days already. So I think something's coming soon, and hopefully it is for everybody, so we can get this all figured out for you.
Great. Okay. Thank you all.